mandated under international rules to hit net zero by 2050 will not come cheap. Cleaner fuels, carbon pricing, and costly port retrofits are expected to drive up freight charges, threatening food affordability and squeezing small businesses. Speaking during a panel discussion on day 2 of the Caribbean Maritime University's Industry Conference on Thursday, Chief Executive Officer of Maertrans International Logistics Limited, Donovan Wignall, notes that Jamaica, which imports the majority of its goods, has little buffer against these increases.
Decarbonization isn't free. Cleaner fuels like biofuels, methanol, carbon, and other carbon pricing mechanism will drive up the cost of general goods and services, medicines, and everything that we consume. So that on the cargo side, on the cruise side, definitely all the supplies that goes into the running of the ship definitely will be impacted by the cost of operation.
He also warns that MSMEs face thinner margins and have fewer options to absorb shocks.
For the most vulnerable in society, especially for small businesses, I advocate for the small business sector. Definitely costs for those businesses will go. Bigger companies and larger countries have the ability to absorb some of these costs. But for smaller businesses, smaller countries, smaller jurisdictions, definitely it will have serious cost implications depending on the level of movement in the prices. The inflation of those countries will go up significantly.
That was CEO of Maertrans International Logistics Limited, Donovan Wignall. Wigton Energy has posted a sharp fall in annual earnings, underscoring the financial strain that climate shocks can impose on Jamaica's energy sector, even when revenues hold steady. The renewable power producer closed its financial year ended March 31, 2025, with net profit down nearly 64% to almost $303 million, when compared with $839 million in 2024. At the company's annual general meeting earlier today, Chief Financial Officer Sean Treasure noted that the drop was driven largely by the absence of last year's one-off tax credit, alongside higher repair and depreciation costs linked to Hurricane Beryl.
Net profit was $302.9 million, down by $536.1 million, or 63.9%. This was primarily due to the absence of the one-off tax credit recorded in the 2024 financial year. Other contributing factors included the impact of Hurricane Beryl and our continued strategic investment in growth, ensuring Wigton is well prepared for opportunities ahead.
Still, total revenues came in at $2.35 billion, virtually unchanged from a year earlier. That stability masked a severe contraction in energy sales, offset by an insurance payout.
While sales revenue declined, our other income recorded a significant increase of $182.5 million, or 57.6%, to $499.2 million from $316.7 million in 2024. This was largely driven by the insurance claim associated with the impact of Hurricane Beryl. We maintain insurance coverage to minimize the impact of events such as hurricane on our assets. As a result, total revenue amounted to $2.35 billion, in line with previous year's $2.37 billion.
That was Wigton Energy Limited's Chief Financial Officer, Sean Treasure. Meanwhile, Wigton Energy is positioning itself as a Caribbean clean energy powerhouse, with plans to add 70 megawatts of solar generation in just 2 years. Chief Executive Officer Gary Barrow confirmed the company has secured a 50-megawatt solar license and is finalizing its power purchase agreement with regulators.
we are able to secure a license to develop 50 megawatts of solar. Significant. And I'd say during the year, significant progress has been made in this regard. We are at the final stages of the power purchase agreement, and that is now with the Office of the Utility Regulations. We have just recently received several environmental permits from NEPA, and we are very advanced with discussions around the financing of these projects with the financial institutions.
Wigton has also begun repowering its original wind farm with solar, and a strategic move that broadens its portfolio beyond wind.
We have also advanced the repowering of Wigton 1 from wind to solar, and we have made some good progress in that regard. Let me just say that building 70 megawatts of solar in 2 years is by no means a small deal. So we have a lot of work ahead of us.
That was CEO of Wigton Energy Limited, Gary Barrow. In other news, the Jamaican Manufacturers and Exporters Association, JMEA, is preparing to host its annual Manufacturers and Exporters Awards Gala this Saturday, October 4, at the Jamaica Pegasus Hotel. This year's staging has drawn a record 188 nominations across 28 categories, surpassing 162 in 2024 and 147 in 2023, according to the JMEA. Industry officials say the milestone reflects stronger participation from across the manufacturing and export sectors. First-time nominees include Triple C Manufacturing, Inspired by Jadon, MC Systems, Simardo, Hyrie Wellness, House of Fennel, and the Contractor Center, broadening the field beyond the traditional industry heavyweights. The awards will again spotlight excellence in both manufacturing and exports, alongside categories added in recent years such as tourism linkages, sustainability, and inclusivity. The JMEA, which represents more than 600 member companies, says the gala remains its signature event for celebrating productivity, innovation, and market growth. We go now to updates from the Bank of Jamaica on how the currency markets traded today. In Friday's currency trading session, the US dollar is selling for $161.34, the Canadian for $115.85, the pound sterling for $216.85, while the going rate for the euro is $190.80. We move to the latest updates from the JSE equities markets. In Friday's trading session, the JSE market activity resulted in the trading of 112 stocks, of which 36 advanced, 45 declined, and 31
And it's time for Market Education Feature, brought to you by CariCris, Regional Ratings, Global Standard.
In today's Market Education Feature, we're taking a look at the 183-day rule. The rule is a global standard used to decide when a person becomes a tax resident. In simple terms, if a non-citizen spends at least 183 days in a country during a tax year, they may be required to pay taxes there. In Jamaica, the key test for tax residency is physical presence. Anyone who spends 183 days or more in the island within a tax year is treated as a resident for tax purposes. The days don't have to be consecutive. Every day counts, even partial ones. That's why keeping accurate travel records is important for individuals who need to establish or maintain their tax residency status.
The market education feature was brought to you by CBX Regional Ratings, Global Standards.
And that's it for the local news segment. Please stay with us. The regional news is up next.
The local news is brought to you by Diamond Trading, better from the start. Development Bank of Jamaica, facilitating economic growth and development. Caribbean flavors and fragrances, tease the senses, and Pulse Investments.
Let's all get fit. This summer's a drip. Hip dips and split. Power in the mind, let's get healthy with it. Sometimes your body's so hard, but your body wants it. And then your head is so home, and it's so like this. So we gotta go 1, 2, 3. One more now. 1, 2, 3. Let's go. One more now. 1, 2, 3. One more now. 1, 2, 3, go.
Welcome back. And now for the regional business news. Caribbean nationals seeking temporary work in the United States now face higher costs as a new US $250 visa surcharge takes effect. The fee, part of Washington's One Big Beautiful Bill, pushes the price of a US temporary work visa well above $400 per applicant. The measure applies equally to student and visitor visas, but analysts warn its heaviest toll may fall on seasonal and temporary workers who rely on U.S. opportunities to support families back home. The surcharge is non-waivable and will be reviewed annually, with authority given to the Secretary of Homeland Security to raise it further in the next fiscal year. For thousands of Caribbean nationals recruited in agriculture, hospitality, and construction, the increase is a significant burden. Recruiters say higher upfront cost could discourage applicants and slow the flow of labor to U.S. farms, hotels, and resorts. Washington defends the move as a tool to deter overstays, but labor economists warn it could reduce remittance flows, a key source of foreign exchange for Caribbean economies, while also tightening labor supply for U.S. employers. The law also sets new fees for asylum seekers, raising the cost of first-time work permits to US $550 and renewals to US $275 with immediate cancellation if claims are denied. The Bahamas has earned a fresh vote of confidence backed by hard data. Global ratings agency Standard & Poor's has upgraded the country's sovereign credit rating from B+ to BB-, moving the country one step closer to investment grade. At a weekly press briefing on Thursday, Economic Affairs Minister Michael Halkitis says the government closed the fiscal year with a deficit of just 0.5% of GDP, right in the middle of its 0.3 to 0.7% target range.
Firstly, we had the release of the full year budget outcome for the government of the Bahamas. So the budget year ended June 2025. And I'm happy to say that we initially set a budget deficit target of between 0.3 and 0.7%, and the final numbers are in, and we've come in at 0.5%. The second matter I wanted to discuss, and it ties into the first, is the upgrade by S&P. On the 26th of September, S&P upgraded our credit rating from B+ to BB-. That is 3 steps below investment grade. We had said during this budget period and afterwards that it is our objective to have the Bahamas return to investment grade within the next 2 to 3 years. This is a step in that direction. This is one step forward.
That was Economic Affairs Minister Michael Halkitis. In other news, Nevis is working to position itself as a luxury hub in the Caribbean by strengthening links with neighboring St. Barthélemy. Premier Mark Brantley revealed that plans for the island's airport expansion include parking for up to 40 private jets, offering St. Bart's high net worth visitors an alternative hub during peak seasons.
One of the things that we are also promoting with St. Bart's is as we embark on our airport expansion project in Nevis, we are hopeful that when that airport is done, we will have parking space for up to 40 private jets. Since many of the St. Bart's clients use private jets as their transport, but cannot land in St. Bart's, we are discussing with them using Nevis as a hub so that those private jets would come here, park here, and those people will be ferried to St. Bart's by light aircraft in 15 minutes.
That was Premier of Nevis, Mark Brantley. It's now time for news from the Trinidad and Tobago Stock Exchange. Overall market activity resulted from trading in 21 securities, of which 5 advanced, 11 declined, and 5 traded firm. Today's winners are A.S. Bryden and Sons Holdings, Massey Holdings, Angostura Holdings, and Grace Kennedy, while leading the losers are L.J. Williams B., the West Indian Tobacco Company, Guardian Media, and Prestige Holdings. Trading activity resulted in the following movements. The All-TNT Index advanced by 8.71 points to close at 1,435.05. The Composite Index advanced by 5.45 points to close at 986.40. The Cross-Listed Index advanced by 0.27 points to close at 70.83. The SME Index remained at 99.32. And we take a short break, but please do stay with us. The international news segment is
Caribbean flavors and fragrances. It started out as a small family-owned business, and now we're a part of a large group of companies. Being listed on the stock exchange allows us a certain prestige. It also speaks to accountability and transparency. We had some fears about getting our information in the public domain, but once we contacted the Jamaica Stock Exchange, who have the knowledge and the experience to guide us, we were comfortable with getting into the process. If you have any doubts about being listed, just give the Jamaica Stock Exchange a call. They'll be very happy to take you through the process and also provide you with information that you may need. Make that call now.
In international news, for the first time in more than a decade, Wall Street won't get its all-important jobs report today. With the U.S. government now 3 days into a shutdown, the Labor Department has suspended its economic data releases, including non-farm payrolls. The disruption comes at a critical time as investors hunt for signals on how far the Federal Reserve will go with its resumed rate cuts. Payrolls are typically considered the king of the numbers, shaping market moves from bonds to currencies. Analysts say the data blackout could create a false calm in markets, but also heighten risk if the shutdown drags into mid-October, forcing investors to unwind trades without reliable signals. It's the first time since 2013 that payrolls data has been delayed. While Washington's gridlock clouds U.S. visibility, policymakers in Tokyo are signaling a different challenge: how to carefully time a return to higher interest rates. Bank of Japan BOJ Governor Kazuo Ueda told business leaders in Osaka that inflation is on track to durably meet the BOJ's 2% target. But he cautioned that global uncertainties, including weak U.S. labor trends and new tariffs, could discourage firms from raising wages. Ueda says the central bank is prepared to raise rates from near historic lows if the economy follows its outlook, but offered no clear signal of an October move. His remarks sent the yen down to $140.72 against the US dollar, with traders now betting on a December hike instead. The BOJ will next meet on October 29 and 30, but the BOJ governor says the tone at the IMF meetings in Washington later this month could also influence the bank's decision. And as central bankers weigh risks, investors are already voting with their wallets, pouring billions into global equities. LSEG Lipper data show global equity funds pulled in nearly $50 billion in the week to October 1st, the heaviest buying in almost a year. U.S. equity funds led with $36 billion in inflows, while European and Asian markets also attracted stronger demand. Technology and financial sector funds were the standouts, drawing $4.2 billion and $3.4 billion respectively, helping push total sector inflows to record highs. Research firm Ned Davis upgraded global equities to overweight, citing a seasonal strength, earnings momentum, and easing inflation pressures. Bond funds also stayed in favor, though weekly inflows slowed to their weakest pace in more than 3 months. Beyond markets, tech valuations continue to stun investors, with artificial intelligence leading the charge. Crunchbase data show OpenAI has become the world's most valuable private company, hitting a valuation of $500 billion. That places it ahead of Elon Musk's SpaceX at $400 billion and well above TikTok's parent ByteDance, valued at $220 billion. Bloomberg reports crypto giant Tether is also seeking fresh capital that could push its valuation to a similar level. The concentration of investor money highlights the dominance of AI and digital assets in shaping the next generation of global growth. Other big private players include A&T Group at $150 billion, Databricks at $100 billion, and Shein at $66 billion. From shutdowns in Washington to soaring tech valuations, these global shifts are driving investor sentiment across asset classes. Still ahead, a recap of today's business news headlines.
Has so much book you need for high school? I'll show you how to make sure you have all the money for my books and even some extra. It's called budgeting, Dad. Making a budget is the most important thing you can do to track your money. It keeps a record of how much you make, how much you spend, where you spend it, and most importantly, how much you can save. Write down all your income, write down all your expenses, see where you can cut down and allot more money to more important things, like saving.
On behalf of the entire production team, I'm Rochelle Moncrief. Thanks for watching CBX, your region, your business, your source.